Good evening. This is Tom Alexander. This is a special stock market report that I wanted to put out this evening. I sent out a written report earlier today. You can find that at the website, www.alexandertrading.com. By the way, if you find value in this, please subscribe. Please like the video. It helps with the algorithms and all of those funky technological things. Okay, so we had just a crazy wild day. We had a huge gap up in the indices. Breadth was extraordinary. Breadth, this highest closing breadth reading in a year, almost exactly, really. So what does that mean? Let's take a look, okay? I'm going to share my screen. And we'll come back to this page. This is a profile view. Let's go to the cash markets first. And we landed on the Russell, so we'll talk about the Russell first. This is the all-time high right here made back in December of 2021. And then the Russell has been in a giant balance area really for over a year. And it's still in a giant balance area. It would need to rally 12% to get to the upper extreme of that balance area. So the Russell is continues to be the huge confounder that it has been for the past year. Now, it is a net positive for the broad market that the Russell has come to life here. And certainly this giant gap up in the wide range up day in the Russell is reflective of the expansion in the internals as measured by NYSE breadth. Okay. I'll touch briefly on the Dow, the least important in my mind of the indices. This is, we're about 2% from the summer high, farther to the all-time high, and that's all I'll say about the Dow. Now let's get into the SPX. The S&P 500, this is the all-time high back in about the first trading day of 2022, prior to the beginning of either a bear market or a correction. How about that? I'll leave others to fight over what it has been since then. Anyway, I can't quite get this thing, so I'll leave it alone. We're about a little less than 2.2% from the summer highs, and this market has just been as vertical in this time frame as a market typically gets. Now, it can go up to here, it can go to new all-time highs, and it may well do that by the end of the year. That wouldn't be too unreasonable. However, I don't think you're going to see this rate of change continue. I mean, last week we had an extraordinary ramp higher, and that was continued on Friday. And then we had higher high on Monday, and then the huge gap up today. And then on top of the huge gap up, we had a wide range cash session. So this is a rate of change that is unsustainable, and it will come in and will slow down. I mentioned last week also that if you're expecting these gaps to be closed, maybe they will be, maybe they won't be. And the timing of gaps closing is always iffy. Gaps tend to be closed just because of the rotational process of the market, just because of the way auction markets trade. So I'm not one of these people that slavishly adheres to the idea, oh, well, this gap will be filled, so I'm going to be short. And this is why you don't do that. I mean, we had 5 or 6 gaps last week, none of which have been filled, if I'm not mistaken, but I digress. We have a giant gap here. Now, this could easily be filled, and if it were to be filled, it would not mean the end of the trend. The momentum here is tremendous, and I'll get to that in a minute. Let's go to the NDX first. Okay, the NDX is now less than 0.6 from the summer high, and let's see, how far is it? And this is going to be close. Don't hold me to the exact tick, to the exact tenth, but we're about 5.6, 5.7% from an all-time high. So if this rally is going to continue into the end of the year, you're certainly going to see new all-time highs in the NDX. Now, could this thing stop on a dime? Could it double top in here? Yeah, all of those things are possibilities. There's no way to know whether or not that will happen. All we're dealing with here are probabilities. Now, based on the probabilities, let's take a look at two things. Let's look at the profile view. Now, what you see here, these are monthly auctions. Each profile unit is 1 month of trade. Now, the funkiness of this auction, it's sort of due to the fact that this is really an artificial constraint on the auction, but we're comparing apples to apples here. So there is value in looking at this view. And if you look at this month's auction, it is a very incomplete, as I said, funky looking structure, meaning you don't really have the high volume node that you typically get and you are very likely to get before this month is out. And if we split this out, okay, now I'm going to split it out. And so what have I done here? So basically what I have done is I've made this month's auction, instead of a profile chart, a bar chart, except the bars are letters. And there are really two phases to this so far. Okay, let's take a look. Let me get my drawing tool here. And let's see. Okay. So we had, this is classic auction market trade. You can please go back and look at the weekend report. Again, that's on the website. Go to alexandertrade.com, weekend report, and look at last weekend's report. This is a step 1, and this is a step 2 and 3. Step 2 is a stopping price. Step 3 is development around that price. Step 2 can only be identified in hindsight. Step 3 is very clear. This is overlapping trade, a lot of common prices. Now, what do we have now? Well, we have another step 1. This is supposed to be a straight line, by the way, and no, I haven't been drinking yet. So this is a step 1. What is inevitable now is going to be something like this. Now, in the bigger picture, what you're probably going to see sooner rather than later is something more like this. If this is the straight line, you're going to have this market come up here and make a top for November, and then you will have more development in this area. And now this is a rough guideline, and if you go back and you look and you spend more of your life than you need to spend staring at this stuff like I have, you understand it always works out this way. You always get these this is a rather funky looking structure here, as a matter of fact, back in June. But you can see you had much more overlap here than we had in this area here. So I would suspect that we're going to get more overlap between now and the end of the month than certainly. I don't think this trend is going to continue straight up as it has been for the past few days. Okay, let me get rid of all this stuff. And let's see, how do I clear this? Clear all drawings. There we go. Okay, now let's take a look at the technical situation of the market. And when I say technical situation of the market, I use something very simple. I don't use magic numbers, Fibonacci, Gann, any of that stuff. I use NYSE data. It is activity. It is information that's generated by actual trade activity between buyers and sellers. I am a pure auction market trader, no magic. And so I'm always looking, what I'm looking for when I'm looking for potential quote unquote support, quote unquote resistance. I want to see where previous pivot highs were. I want to see where there is volume on the horizontal scale. I said this last weekend. I said that there was not much between where we were and this summer high. And I'll repeat that. You know, we're not that far away, a little bit more than 2% away. Also said, if you're looking at the 5-day moving average, now back here, I was looking for a top, and that occurred. We had that two-sided trade that occurred in here. I also said I would suspect that you would get a series of higher highs and divergences in the 5-day moving average, that would be typical, and we're getting it in spades. Now, Brett closed today at 2309. The last time we closed at this high or higher was back on November 10th. Here, you can see that didn't stop it. The market went higher. And then before this, the previous reading was way back a year ago. I think it was in November of 2022. Well, this is November of 2022. And then if you go back further, I really can't find one until you go back all the way to the kickoff back in 2021 following the COVID crash. So that's where we are, guys. I would expect, let me show you one more thing. Now, I find this chart, I use this for intraday trade decisions. I lean on this very heavily. And this is the SPX. Below it, you see breadth. This is cash session data. This is 30-minute bars. And price and breadth will establish a pattern. And when you I did not expect the momentum peak that we saw back on November 2nd and 3rd, which is what this is, to be taken out. Well, it has been. So this is a reset in this process. So now what is likely to occur is we get, I don't know what will happen tomorrow, but breadth may come in, at the opening because they're not because they're selling, but just a momentary pause in buying. Breadth may do some number like this and get down negative slightly. And then you have this series of higher highs that occurs, and you'll have a higher high in price. And then you get this series as the market works higher, and breadth will eventually come down in here. And every time breadth gets down in here in a bull leg, in a bull trend, it's probably close to a low, as long as the bull trend is in effect. And then you add that into the mix of, is the market continuing to make higher highs and higher lows? And as long as it is, that's your tell. When these levels, and this is the closest thing to a retracement that we've had since the bottom on the 27th. And this was a whopping a little bit more than 1.1% retracement. Now, at some point, you'll get retracements greater than this, but right now, this is it. Now, you can also see this retracement and this retracement, which was less than this one. This is why I watch breadth so closely. Breadth came all the way down into, this was negative, or about negative 1,300. This was about negative 1,400. These were lows. So if and when, and it will happen, when breadth gets down here again, that's what you're looking for. You want to see when breadth reaches down here, you want to see where price is up here. Where is it up in here? And then be looking for another low. And we should see certainly at least one, and likely more than one, contraction in breadth down to this level with some retracement in price, higher highs. And then I said I would be really surprised if we saw this level again by the end of the year. I said this back when it occurred. I'll repeat myself. I'll be very surprised if we see this level taken out again by the end of the year. But that does not mean this market cannot trade higher all the way into and through the beginning of the year. So guys, I hope you found this helpful. I will continue to update. Thank you. I will speak with you again soon.